Hello, today is October 26, 2019. We'll go over our calls. We said that Friday we should have either a straight line drop at the open or a gap and a prompt move over this high. Well, we had a straight line drop at the open. We also gapped at a prompt move over this high as well. This is the pattern with the early high, and Monday's pattern has the early high as well. We have a new target. I'm not so certain it'll work. We've had this big rally, came close to the all-time high, couldn't close over any of these highs, and with 5 minutes left to trade, couldn't even hold over this intervening low here between these two highs. That's negative. It gets invalidated if we take this out fast. So there's our target. The market's going to continue higher. It shouldn't be too hard to meet. And if we don't, then we have problems. Early on, MEJT gave a buy signal, an ultimate buy signal, but it just means there's a higher target. It was satisfied immediately. It called for a rally, but it didn't have to be as strong as it was. Doesn't mean it couldn't be, it just means it wasn't called for by my system. Later on, MEJT says this drop is false because it's a target of 30.2476. Don't forget at major changes in trend, you're going to get a failed target. So you can't rely on it when you're near trend extremes. Here's what we said. We said odds favor gapping up over today's high, dropping big at the open. We said eventually we'll break through this. It doesn't preclude dropping first. Now, S&P is near the all-time high, but it's a weighted average. Apple makes up a large part of the average. So when Apple rallies, the averages move higher, and it's disappointing other market leaders aren't playing along. There's the percentage of stocks with favorable patterns, and as we've been consolidating here, fewer and fewer stocks have these favorable patterns. This is the kind of stock I like to buy. Disney. You've got this years-long consolidation, a breakout on big volume. In the bull market, you really want to be off to the races, but here for months, anyone who's invested in this is underwater, and even people who bought the stock on the day of this strong move up, they really just treaded water all year long. Now, Texas Instruments was one of my favorite chart patterns, and I mean, you're going up and up and up, and then you have this big drop this week. You're now lower than you were nearly 2 years ago, and this is a market leader. Let's show a few more. Now, HCP is a strong stock and a strong group, just marches along merely on its way, a good dividend, has enough earnings to pay for it, market's hitting new highs, kablooey. That's not what you want to see when the market's ready to break out. Well, this is the count I've been using. It's not the only count. We'll come to another one in just a minute. We keep saying this might be the end of Blue B, but regardless of how you count it, we had an impulse. We have a consolidation. And when the consolidation's over, you should move in an impulsive move in wave 3. And I can't count this leg up as impulsive. Here we've been moving 2 weeks. It's clearly overlapping. It isn't impulsive. And you're really only up 2% after a 2-week rally. The conclusion is we're still in the consolidation, and this is not part of the wave round 3 breakout, and that means we have to complete wave round 2. It doesn't tell us where this move ends. Now it's possible to read this as a triangle, A, B, C, D. Here's your impulsive wave. It ended May 1st. We're in a corrective wave. This is clearly overlapping and you're not impulsive. So this is not wave round 3. It's possible to read this as a triangle. Triangles occur in wave B, not A, not C. Can't be wave 4 by any count I know. So we're in wave blue B, and we have to figure out where it ends. Well, if it is a triangle, we don't know that for sure, then wave magenta E should be shorter than wave magenta C, which means we can't have more than 20 handles on the upside. It's not a lot, less than 1%. So how do you calculate the end of magenta E? Well, there's no guaranteed way that I know of, but if this is a diamond on stilts, here's your stilt, inverted, a diamond on stilts. You take the height of, you don't know which leg to take, but you take the height, set it at 50%, and there's Friday's high. So you don't know which points to take, but if we stop here, it works. So this high Friday is one of the possible targets for the end of this leg. But even if that isn't the end of this leg, we're still in the consolidation, and at some point we have to have a corrective wave before the rally continues. So Monday's pattern has the early high, could gap down first. Typically the market rallies all day, as a high a day in the final hour. Failure is a straight line drop, and if this high was it, I really want us to drop right from the open. We had a low of day in the opening bar and rallied all day. There's a higher target, and those are positive things. We're close enough to the all-time high. That all-time high has to break at some point. Doesn't mean it has to break now. The breadth remains poor. The day-long rally closed under these highs, so we couldn't hold on to the highs. And the wave count suggests we have limited upside. I don't know how much we have to go down. Doesn't have to be a lot. But for the count to work, the consolidation has to end with a down wave, and this isn't it. Looking for the pattern with the early high Monday. This is a potential end of the wave. There are other potential ends too. If we start dropping and take out some prior lows, that would be wave blue C down, and that's today's call.